We were having a good month. We were having a 6-month winning streak. 2 days, bam, right on the month. New month, new money, new strategies, ton of earnings. Look at Amazon creeping back 200 at 200. You think Bezos is going to sell some more? Cover Apple, Intel, Team. Tommy Lackey, 835. That guy's been spot on with his market calls. We'll get his opinion. It's Friday. We're wrapping up the week on pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, good morning, traders and investors. Let me share my screen here. We'll get a quick look at some of the commodities and ETFs and futures and get on with the show. We got a lot to cover. S&P's rebound just clipped under Thursday's low, back up 24 and a half handles, 57.6250. If you can find resistance in here, let me know, because even the intraday high from yesterday is way up there at 58.07. We have the TLT that's trading in the red by a couple pennies. We have the USO up 8 cents, 73.16. Gold and silver both positive here. It looks like just about the same. You have the GLD up 66 cents, 254.17. Silver ETF up 11 cents, 29.92. And Bitcoin, let's call it flat here, 70,500. Well, I hope everyone had a good Halloween and wasn't too spooky. Let's bring on Triple D. Triple D, did the kids pile in with the candy?
Oh, yeah. There was so much candy, and I ate a lot of it, too, and I'm feeling it today, I tell you. They bring it in, and the boys giving you Reese's peanut butter cups and all the loot, and I'm like, mowing this. There's one even on my desk still right now. I couldn't even eat that one because it was too full from eating too many other candies. So I'm hurting. I have a candy hangover. Candy hangover. AB, did you go trick-or-treating?
I did not go trick-or-treating. My friend had a little get-together for Halloween last night. Stopped by for a few minutes, but nothing too crazy. But yeah, should we talk some earnings?
Yeah, we can jump right into it here. Cut the small talk. Let's get to Apple.
Yeah, let's get to Apple. So, of course, we've been talking about it all week. This is the biggest week in terms of big tech earnings. Apple and Amazon rounding it out last night, and Apple came out. I don't know why does Apple didn't come out till 4:30. I don't know why they wait so long. I was staying here in the office waiting for that, and it took a while. But when it finally did come in, Apple's EPS came in at $1.64. That beat the $1.60 estimate. And then you had, hold on real quick. And then you had, revenue of $94.93 billion. Or sorry, that's the guidance. I don't know why I'm not seeing the actual revenue for the previous quarter here in Pro.
Should be in there.
Okay, here. Sales came in at $94.9 billion, beat the $94.56 billion estimate. So the results were actually stronger than expected, but I think a little bit of weakness in the iPhone sales is what was hitting the stock. So you saw Apple actually go down on this. But what was interesting about Apple's report was the expected move beforehand was only about 3%. So the market was expecting Apple to hold pretty steady after this report, whether it went up or down. And that's exactly what happened. It did go down, but not by much. So you're only seeing Apple down about $3.75 here, or 1.65%. So not a big move on the Apple earnings here.
I mean, Apple has become, and people have been arguing this, a place where cash goes to hide now. That it's this cash cow staple that everybody wants with the potential to participate in AI. So people don't mind paying 30 times earnings for this thing because they know it's steady as she goes. I mean, there's an argument there. The volatility on Apple is definitely less than all the other Magnificent Seven. I mean, look at the chart even, Joel, over the course of the last few months. Bad news, it moves $1 or $2. Good news, moves a little bit. They hadn't been having a lot of good news. It had the big down gap day in August, and that was obviously off the carry trade when everything got hit. But if you remove the August 5th carry trade where everything got murdered and just look at the chart, Apple's volatility has been steadily declining for years, really. Like we're just kind of steady as she goes. Where you see these big moves sometimes in Microsoft, you see huge moves in Tesla. You'll see big moves in Amazon, which we're getting today. You don't see these huge moves in Apple anymore. So there is an argument. The argument is to be made, and people have been making this argument that this is just where money managers go to hide now. And this is not a volatile stock anymore.
The chart's a little like nothing's like really sticking out to me. Like resistance is sticking out to me. Like the big boys are purged at 235, 236. Warren's probably up there trying to lighten up a little bit more, but you're not going to see that today. On the downside, like I don't have like a warm and fuzzy level on the downside. I mean, you could say, yeah, oh, 220. Oh, I love 220. Well, it bounced off there in the pre-market up a buck 71. I think two bad days, so the streets leaning. It was leaning, correct into the report. Also, the market kind of leaned correctly into the report here, with it being down. I'm just gonna, if you're, I think, a long-term or short-term Apple shareholder, look at that closing price from yesterday, 225.91. Yeah, we're 3-4 bucks away from it. If it gets back above that, I mean, I first use it as resistance, but that's where it was the day before the earnings. This is the way the fundamental guys. So I would say right now, until you clear that 226, I don't know. This feels like the path of least resistance is lower here in Apple. And I'm not like super excited. Oh, I got to buy the dip at 220. Maybe if the market really gets hit today, maybe you wait for the 215, 216 area. But hang it in there. Chart does not look bad at all.
It just always seems like they come and they buy the dip, even when it's disappointing here. And we haven't really bought the dip much on this one here yet, but it's hard to be bearish. It's hard to make money shorting Apple. It just is. Now, one day, maybe it's going to be the case. I don't own it anymore because I don't like the valuation, but I get it. I get that people are hiding out in it. I get, that it's been more stable than the other Magnificent Seven stocks. Let's move to Amazon. Because you want to see some movement here, you've got it. I have Amazon in 2 accounts. Love the company. Love the stock. It's almost at all-time highs.
Yeah, Amazon breaking out here. And so Amazon reported EPS of $1.43 versus the $1.14 per share or EPS estimate. Revenue came in at $158.88 billion versus the $157.2 billion estimate. Amazon AWS Web Services came in at 27.4 billion versus the $27.5 billion expected. So actually slightly light on the AWS earnings, but the growth of the cloud business for Amazon was growing at a faster pace than it was the same time period last year. So even though that number came in slightly below the estimates, the street still liked the fact that the growth was significant there and higher than it was the last year. So that was, the big thing for Amazon. The cloud growth continues to be there. You're seeing Amazon shares now up 7.25% this morning, or $13.50, breaking out near $200. Like you said, Dennis, close to those all-time highs.
Yeah, and the valuation isn't crazy here anymore either. I mean, we always looked at Amazon 40, 50, 60 times earnings. Back in the day it was 90 times earnings, and people were like, well, it's nuts. And, we had Michael Pachter, we had other people on this show explaining, that Amazon can make more money if they want to, but they just focus on growing the top line. They've grown that bottom line, Joel. They've grown that bottom line significantly, and Amazon is as cheap as I think it's ever been. I don't remember Amazon ever having a forward PE of 31. I don't remember it ever having a PE of 31. I never remember it that low. And that's where it is right now. Current PE is 39. Forward PE is 31. I don't remember it ever having a forward PE of 31. And you can correct me, chat. When would it have been cheaper, Joel?
I don't know. I mean,
I don't think so. Because it's always had nosebleed valuations.
It's always spent the money. Yep.
Yeah, and right now they've just been focusing, and they've been building the bottom line here too, and they're making a lot of money. And I mean, 31 times for Amazon with the growth, with the cloud, with everything that they do, doesn't seem expensive. It seems like if you were going to say you want to buy Apple at 31 times earnings or Amazon at 31 times earnings, I would take Amazon all day long.
Wow. Our chat here is, as usual, on fire.
The
I'm
200.
looking at 3 comments here. I think the first one comes from Kenny Bruce. Hey, Kenny, how you doing? I don't remember you being on the show. Does Amazon continue to bounce off the Bezo wall at 200? Danielle McAdams, she doesn't want to be left out. Is the Great Wall of Bezos still there? And then good old Philip Pugh comes in, 200 Amazon,
Yeah.
Bezos wall. So
Yeah.
that's the way I would look at it. All these highs right here, Jeff Bezos was up there selling. So I don't know if he's going to be there again. If 200 was your target or 199.85, here's your target. Don't know what the expected move is. The only reason I'm just, don't want to kind of put a cap on this at 200 today is, I don't want to get Reddited, I mean, and here's a real company with real earnings, and you saw what Reddit did. So just keep an eye on that $200 area. I wouldn't like to see it open 200, go 202 and a quarter, and then come back down through that open.
Well,
See
I
what,
think you guys in the chat is making a fantastic point, and the thought crossed my mind too here. I am long Amazon in the long-term accounts. I plan on staying in the long-term accounts. But if you've got it on for a trade, you got to look at this 200 level and say, look, the Great Wall of Bezos, and I love that, is probably active. Like every time it went over 200, he'd start selling. And if he's not done selling, we know that these, when they're selling the amount of shares that they sell, that can hold price down. So I do think 200 comes into play, even from a technical level. Take Bezos out, just the psychological level where, oh, it's back here. It's back to the highs. I got a chance to sell the highs again here. Maybe I take that shot. And we're not in this rip-roaring bull market either where everything's just breaking out and going. And, there's certain stocks, like we've been saying, AB, it's a stock picker's market where certain stocks are very strong, but other stocks are very weak. So technicals do come into play here. So I think, buying it at 200, I don't know if I'd be doing that. Again, I'm long it already. I don't know if I'm going to sell. I'm not selling any of my stock just because, I think long-term it's going higher. But short-term as a trade, if you had this on, you get the expected move up, $200 sounds like a logical selling point.
and this also, just think psychologically here, like, wow, the stock was closed at 192.73 on Tuesday, and traded as low as 185.23 on yesterday's all-out blitz sell at 359. Now everyone's getting their money back.
Yeah.
Everybody that's ever owned a stock ever is getting their money back. So we'll see what happens. We'll see
I
what
got my
happens.
money back.
Yeah, we'll see what happens. But great point out by the chat there. And like you said, where to buy this thing? Well, use your short-term charts for that.
It's hard buying at resistance. I mean, if we get up to 203, 204 and we don't see any Bezos sales, then you can say maybe the Great Wall of Bezos is gone. But guilty until proven innocent here. Like we saw with Oxy, when the walls break, when they stop buying Oxy, if he stops selling, stocks can go. NVIDIA was held down by Jensen Huang forever. Remember at the 120 level he was selling, and then that, I think it was Bloomberg article came, or somebody came out with an article and said he's done for now, and that's what really kick-started the rally in the last month and a half in NVIDIA. So when the whales are selling, they hold stock down. When the whales are buying, they hold stocks up, and we just don't know if the whale is still there. So guilty until proven innocent. AB is moving on to another one.
Yeah, I hate to do this. We got a little penny stock moving here.
Penny stocks.
Yeah,
Joel, it's unlike you to go to a penny stock. What's the deal with this one? I don't even know.
I'm not going to. Global Star. Someone said something with Apple. I don't know if that's true.
Yeah, it's 7 o'clock. Global Star and Apple agreed to make certain amendments to services agreement.
Okay. All right.
This is like, but the memesters love these little stocks.
This stock has run before. If you go to zoom out on the chart, you can see it's had some previous times where it's spiked up, and gone up hundreds of % in a couple day period, and then came back down. But we started with Apple, which was a slight loser this morning, pretty flat. We went to Amazon, more of a winner, and then we've got another big winner. That is Team Atlassian.
How do you pronounce that one, Dennis?
Atlassian.
Atlassian, that's what I thought. Atlassian reported yesterday after the close. That is your big winner of the day. So EPS came in at 77 cents. That beat by 12 cents. Revenue came in at 1.19 billion. That beat by 30 million. And then the guidance here, they raised their revenue guidance. They said they see Q2 revenue coming at 1.23 to 1.24, operating margin 10%. Sees fiscal year 2025 revenue growth at 16.5% to 17%. They also announced a new $1.5 billion share buyback program following completion of its existing $1 billion buyback program. So all around, the double beat, buyback, guidance raise, all good news. And then you had some analysts coming in this morning upgrading the target, and Atlassian trading up $40 this morning, 21.2%.
Comeback story maybe, because obviously in the craziness of 2021 when everything just got ahead of itself, the stock traded up to $483. It's taken a 3.5-year breather, a 3-year breather here, still significantly off the highs. You got some other highs to contend with too. We'll let Joel give those levels there, but it's a pop. It's good news. Stocks coming back. You're starting to see some of these stocks, like that were really darlings of 2021 and fell 60, 70%. Some of them are starting to perk up here again. I do think seasonality comes into play here too. We are entering November. We haven't done any macro talk here, but it is a new month and it could be a new market, where September, obviously started dicey. And then, we had the big rally. And then October, we kind of just had a lot of complacency until the big sell-off there yesterday. So October was actually kind of a quiet month until yesterday. Does this month change things, because we're now getting an election season, within 5 days, and seasonality coming into play? I mean, I don't know if I want to be full bearish stocks here.
So Dennis, help me out on this one. Where is the resistance in this
team?
Yeah,
I don't
help
know.
me out.
Well, I would just go to those 250 levels, where we got up to
Okay,
before,
that's
258. One
that's
level.
Yeah.
Beginning of the year, $258, but that's nothing really in here. So, I mean,
I know.
you're kind of in the middle of nowhere here at 228.
It's
It
tough.
could go higher, could give some back. Sometimes these are just curveballs, and I just avoid them.
I mean, the only thing I can say right now is someone's marking this just 230 area here. They're like, okay, that's my target. I'm sticking there. So until you get that whale to move, I would say, in one of those scenarios where the longer it takes to take out the pre-market high, then more of a chance of decline. But and who knows, if they got some at 230, they may have some at 231 too. Because what I do in these kind of instances, I go to the monthlies, and the monthly resistance is 218. Well, we're $2 above that. Then I go, well, I'll just go to the weeklies to find something. I go to the weeklies, and I have nothing there either. We have 220. So you go to so there's a lot of air in here. It seems to be well bid up here, 47,000 shares. Let's see what happens at the battle of 230 there.
Let's do Intel.
Yeah, I was going to say, you said comeback story. Maybe we got another comeback story going on here with
Dennis, you won't believe what this
I know where it went.
Oh
I actually, because I was in and out, we had a lot of people over for Halloween, so I didn't trade actively. We traded a bit last night, but wasn't active. We had a lot of people over for a Halloween party here. I looked at the Intel.
What kind of food did you have?
Oh, everything. People brought
dip.
It had some hot dogs, dip, like all for the kids, and Caesar salad. We had somebody made pierogies. It was good. And then I ate a bunch of candy. Like, that's what I said. I feel awful, just from it's food hangover, not even just candy hangover, food hangover. And I need to full on clean out the system here today. Smoothies all day. New month, new Denny. No more eating junk for a little bit.
I pounded two Coney dogs, and I could have easily had a third.
Joel can eat.
Yeah,
he's small, but he can eat. He's mighty.
All right, man. Did you?
All right.
I did see it.
24. All right, I'm sorry, Aaron. Go ahead. 24.85.
So the numbers here for Intel, they reported EPS of a loss of 46 cents that missed by 43 cents, revenue of $13.28 billion that beat by $240 million, Intel says it approved a series of cost and capital reduction initiatives, says expects to recognize $3 billion of restructuring charges related to those actions. Upbeat guidance for the next quarter. So you did see the stock pop here, a little bit of a low bar, but Intel trading up about $1.63 or 7.5% this morning.
People banking on the turnaround story here. You know, they want to get it out of a cash burn situation, and they do see Q4 making 12 cents versus the 8-cent estimate here. So they feel like they're coming out of the cash burn situation and maybe start making money. And that's why the stock is starting to show some life. You know, Joel and I was going through, Joel, my long-term portfolio. And because, you know, it's been such, you know, a strong market here for a while here, I should bring it up, but I'm down to like only 5 or 6 losers left, like in the long-term portfolio. It's starting to look like that again, where everything is turned in. Intel sticks out like a sore thumb because I got rid of the SMCI, so that was a loser. But Intel sticks out like a sore thumb. It's a big loser for me. My average cost base is like $33 or $34. And obviously had the gap down and just the disaster of that earnings report. And I sold some of it even on that in the hole because I was like, I just, you know, don't know if there's going to be a turnaround story here. Maybe it's here, maybe it's not. But the story's been awful. But whoever buys this up to almost $25 last night on this report is just flat out nuts.
What was
so, I mean, 23 maybe, 25. What are you doing?
What was the expected move?
Probably less than that. Not $3.50. No way. I'll get you the expected move right now. No way. It probably was probably about where it is. I would guess. If I was just guessing, I'd guess $1.50 on the expected move.
I'd say
not
more.
3.
I'd say two. One
so,
and
okay.
3
So the expected move was indeed, oh God, it was a lot more than you think, actually. It was $2.50. It was $2.50. So when you're buying lesson time, educational day, new month, more education. We've given this lesson before, though. If you're trading earnings and you can't help yourself and you're buying stocks way above the expected move, you're asking for trouble. We've had CC Legator on this show a lot of times, and he shows you how, you know, the majority of stocks, when he tracks out that expected move, usually stay within the expected move. So we're back within the expected move, but buying or selling outside the expected move is usually not a great idea. I mean, I guess if the report is just disaster, it may make sense. I guess if the report is just unbelievable, it may make sense. This was not an unbelievable report. So buying this up to $24.50 and $24.65 last night was just pissing money away. Back here, $23.12 kind of feels like where it wants to be. You know, is there a turnaround story? Maybe. Chips, you know, foundry business, maybe. But there's a lot of question marks still for Intel.
Okay, I like 24.85. I mean, that gets it into this gap area here, but we're not even going to talk because that's not even relevant right now. What's relevant is the high since it made the low. Oh wow, what confluence you had there! 24.66 was your high on September 27th, so you did have some relevance there when you went to 24.85. You probably would have had to been out there immediately. But you know, for right now, I mean, you're still below the high for the week. So right now, the high for the week is 23.34. That's another 50, 60 cents away from there. Maybe you get up to that, start thinking about the $24 area. Seems like a pretty good report. You know, the market is holding in there until we get that jobs number here. We'll see what happens then. But you might get this if at the bottom of yesterday's range, if you're so inclined. Maybe a bad jobs number, a little hit, 22.25. So you got a chance here. I mean, it's showing some life. Whether or not this is the be all end all for Intel to come back. I guess when I was talking about just doing the real stupid average down here.
Yeah.
I would have been pop. I would have been loving selling it over $24. But bunching up on the monthly too here, some consolidation. See if Intel. I mean, it just seems like it might have some bad news next week. You know, it's not quite like Boeing. But anyways, before we move on, what you want to cover?
Speaking of bad news stocks, before we move on from the earnings parade, I just want to move on just for a second here. We're going to come back to the earnings parade
SMCI.
here. Yeah, it's just this natural segue because, you know, this was a disaster in my portfolio. I mean, it was, you know, I sold it on the headline, obviously, that the auditors left. The auditors are leaving. I'm leaving. Obviously, I should have sold prior, maybe on the Hindenburg report, but and then when they came out the next day and said basically that, oh yeah, we got to go dot the I's and cross the T's here, and they didn't deny everything right away. It was your selling opportunity. And the stock had crawled back and crawled back. But when the auditors leave, it's time to go. $35. I sold the open that day, 2 days ago, get out of my long-term position, take the loss, and move on. I think it was a 25% loss. Wow, it's just continued down here, Joel. It's having real trouble finding any bit of a bid. Here you've got a day where basically a lot of stocks are rallying. It's a pretty strong day for the market. The stock is down another 1.8%. So it cannot stop going down right now. People are actually worried about this getting delisted. And I think we said yesterday, I think they have till November 16th to get that filing in there, or they risk that. I think they'll get the filing in there. I don't think it's going to get delisted. But man, there's a lot of problems here at this company right now.
Yeah, well, just hope it's not symptomatic of the rest of the AI world here. I mean, this was the darling child. I mean,
well, I don't think, and I want to just take on that case because this actually was brought up multiple places on Twitter. People saying, is Nvidia next? There's a big difference, between bubbles and between potential fraud. So I don't think the entire AI trade is anything like SMCI. This was definitely a darling. It was one of my calls, and I made a lot of money on it. I think it's the stock I'm up on the most this year, even despite losing as much as I did on the back half of this trade. I think it's still my number one stock of the year because it went up so much. I had bought it at like $250, and I sold some at $550, and sold some at $650 and $750, and finally all out at I think $950. It was just an unbelievable trade in the first half of the year. It just wouldn't stop going. I never thought it would go that
you always
much.
get in trouble when you try and re-enter a lot.
A lot of times, yeah. A lot of times when you're out clean, you made a lot of money, stay out. I re-entered at 700 a piece because I was like, it's come back down from 1150, 700. I'm like, I can get behind this valuation. Well, when stocks, we can't trust the books, valuation becomes meaningless there. So even getting behind the valuation didn't matter at that point in time. And we're gonna get the jobs number here in 2 minutes. So
Yeah. So, hey, listen. So, I see Tommy lurking in the background there. Tommy, Tommy, you want to come on and be on for the actual jobs number with us?
Give us
Can
a
you
thumbs
hear
up
us?
if you want to.
Wave if you want to come on during the jobs number.
Or if he wants to wait, he can wait too.
Yeah,
Come on. Come on,
Yeah,
give us
bring
some
him on.
jobs. Sure.
All right, let's bring Tommy on a few minutes early.
All right, you guys know Tommy Lackey, GT Lackey is his symbol, Relativity Capital Management. You are in for a treat. AB is going to give us the preview numbers. Dennis is going to go bang on the keyboard, and you might want to sit down because when you hear my S&P description, actually, it's pretty. All right,
How is he? Give him a chance to talk for a minute here.
I'm doing great. How are you guys doing?
We're doing good. We're getting ready for a jobs. It's a new month, Tommy. New month. Are you excited for a new month?
Always.
Okay, so we
That's
got to
right.
get to EP to preview the jobs number, but we're going to get Tommy's analysis here right after this jobs number. So
real quick before the numbers come out. So unemployment rate is at 4.1%. That's expected to stay steady at 4.1%. We're expecting to see hourly wages drop from 4.10% growth to 3.10% growth. So 0.3% there on hourly wages. The actual amount of jobs added is expected to be 110,000. So that's much less than the 254,000 that we got the last month. And I have seen some economists saying that the Boeing strike is expected to impact this jobs report. So that should be interesting to see. And then, so 4.1% is the unemployment rate we are looking for today. The numbers are imminent here. It is 8:30. Let's see.
Got it. We've had a little bit of action here. First move was down and then back up. It might be a little bit. It looks like a nothing burger to me. I think it's going to be pretty close. We are selling off
in line 4.1% versus the 4.1% estimated. It was 4.1% prior. So across the board, I don't know if this is right, but it says USA non-farm payrolls for October 12,000 versus the 106,000 estimate, 223,000 prior. So something's going on with that number there. Only 12,000 jobs added last month versus the 106,000 estimate. So I don't know, again, if that's due to the Boeing strike or what it is. So we'll see if we get any more color on that number.
Okay. So far, I mean, you did get a spike up. You made a new pre-market high. That's the good news. But right now, it looks like it's just really a battle here. And what I like to look at, and then we're going to go to Tommy here, is I like to see what the close was at 8:30. 8:30 is the only time I use a 1 minute chart, and that was 57.60 and a quarter. We've been up 5 points from that. We've been down 5 points for it. So that's what that's going to focus. My focus the rest of the day. If the Bulls establish a strong bid here, 57.60, then okay, let's work our way back up. If somehow, the Bears dig in there at 57.60, ways away from that pre-market low. So, all right, just the TLT, the truth indicator here, that popped a little bit. So that's good. I mean, that's been in the doldrums. So TLT perking up a little bit, but I'm going to remove my chart here and first go to Tommy here. And Tommy, what's your reaction to the jobs number?
The same as all of them. Nothing. I mean, I hate to say it, but I do think we overblow these things just way too much. And I understand it's fun for morning and for people who are shorter term traders than me, like Dennis and a lot of your audience, obviously. But for me, it really doesn't make a big deal other than kind of watching where the reactions are next. Actually, I'm watching the dollar drop pretty heavily and I'm watching the VIX drop. Okay, so that tells me that it's going to be, at this moment, it's looking like it's a potential net positive, that it didn't come in too hot. And then the payrolls at 12,000, I guess that is less than what they wanted. But at the same time, we've been hearing a lot of ramblings back and forth and all that anyway. I mean, whether it's Boeing or not, I don't really know that I care right now. I think everybody's more concerned about getting through the election, which at the same time, the election, the payrolls, everything, it all goes back to, as we've talked about for a decade now, it has nothing to do with whatever that event is. It's watching now and seeing what the actual reaction is, like you were doing right after.
All right. Oh, I'm sorry. Go ahead.
No, you go ahead.
Well, I was just going to say, I'm going to go to the SPY here, and you're looking at your monthly charts, right? You're looking at your monthly charts just a couple days ago, right? And you're thinking, well, man, we're going to have a nice month here, and what happens? You ended up still. Let's see. You ended September at 73.76, and you ended up below that point, but you spent a lot of time make a new all-time high. Kind of messes up your monthly charts. Talk about the end of the month price action here and the implications for the early price. And I know we got the election, but just the way we got kind of weak at the end of the month, what does that translate for the new month?
Well, and I think that's exactly it. I think the most important thing is we pay attention enough to notice what you just said. We spend a lot of the month making new highs and above that, and we get a couple of sell-off days at the end of the month. Does that mean that they are not important? No. Does that mean that they've changed the whole trend? No. So at that same time, we've got to continue to watch and see where we go as we start the month. We might start with a little bit of weakness. It doesn't look like it today. Looks like, I've talked to y'all before. We've talked before in years past about a bear raid. In bull markets, especially when they run pretty well, oftentimes we have bear raids where we have these big 1 or 2 day downs, and then all of a sudden they come back in. And sometimes they can't even make it into a weekly chart, but this time it did. And even the monthly charts, and like you said, it kind of tainted quite a few monthly charts. Now, we have to watch that as technicians and watch and make sure that those monthly charts don't continue to develop to the downside. But it's like everything else, it needs some follow through, and that's going to take us a month to get. So I don't think we can really hang our hats on these monthly charts other than to kind of see that, hey, wasn't quite as strong as people might like or might have thought it was middle of the month. But at the same time, what period did we just end? Supposedly the worst 6 months of the year, and really at almost the worst 3 months when you think of August, September, October. In most people's mindsets, that's the worst quarter. So from that stance, that quarter was up pretty strong overall. and it gave back a little bit in the last couple of days. And it wasn't really on that high a volume. If you look at a lot of these monthly charts, the volume is not exactly excessive. So I would step back from there and say, yes, it's something we got to pay attention to, but I am still much more positive on what we've seen happen over this quarter, i.e. when you don't follow seasonality, you should probably pay attention. And we had pretty heavy seasonality the last 3 months that we did not follow. So, and from that stance, it gives us that opportunity to say maybe there is some underlying buying, some underlying strength there that people just aren't ready to accept.
So, Tommy, I mean, we just got through kind of the biggest week of earnings for big tech companies, mixed across the board with a lot of, I think, disappointing reactions. So the earnings failed to lead us to that next breakout on the overall market to new highs. What could be the next catalyst? What could be the next thing that does bring us back to new highs and maybe reignite some positive action in the tech market?
Well, and I think we already have seen a lot of it. Again, I was talking with someone a few weeks ago, another show, and they were talking about the idea of tech doing nothing all last quarter. And they were pretty much lamenting that. And I'm sitting here with a monster smile on my face, like, that's awesome. I mean, we had huge runs in a lot of these tech names, especially the biggest ones. The fact that they spent 3 to 4 months moving sideways and didn't really give up a lot of ground, to me, that's a lot of underlying buying that kept them from really rolling over. Now, there are some that right now have some precarious looks, like Microsoft after their earnings, but it has not broken the major pattern down. The longer term pattern, which people are looking at, is the larger head and shoulders pattern there. So that's probably one of the ugliest ones. But when you look at something like an Amazon monthly chart like y'all had before, it just broke out of a huge base, consolidated sideways, and now it's back at, now that's the Amazon or the Microsoft one.
I go to Amazon.
If you don't mind flipping to Amazon, look at that monthly. It had a huge base. It broke out of that base. Now it's pretty much moved sideways other than that one little spike down there in the middle. And we're back towards the top of that range right now after a solid earnings. Like you said, lowest multiples, things like that in a long time. Does that look to you like a chart that needs to roll over or is way out of whack? And see, this is a chart that if this moves up, not only does it move consumer discretionary sector huge, especially the ETFs, which is where a lot of people pay their focus these days because it's such a heavy weighting in it. It also moves the S&P, it moves the Dow, it moves the NASDAQ. And so, these are the kind of things that it just hasn't performed. If you look at this monthly chart over that longer term period since 2021, yes, we broke out. We've moved sideways for how many months is that? 1, 2, 3, 4, 5, 6, 7 or 8 months. And now it's back at the highs. How can I see that as bearish?
Yeah, I think it was just, you're right. Like, we get ahead of ourselves and you get, the pullback, and obviously, 2022 was ugly for stocks, and then climbing back, and we're just back to where we were 2021 with a valuation. And I firmly believe this is, I don't remember Amazon ever trading 31 times forward earnings. I don't remember that ever. It's always been 50, 60, 80, 100 times earnings. I mean, the valuation all of a sudden is reasonable. And if you think of the growth prospects for a company like Amazon, I know it's hard to grow $2 trillion companies, but man, if we know it can be done. We've watched Microsoft and Apple in the past. It's hard to say that this stock is, this is, just overvalued, nosebleed valuation. It's just not.
Well, and there's more to it than even that. It's a scenario to where there's a lot of these large companies out here that are like that. It's not just in the tech sector, it's across Deere and some of these others. But at the same time, you step back and look at them as to where something like a Microsoft, Aaron made a good point that some of these tech earnings have been disappointing to investors. And in a very, very 2 to 3 day short-term standpoint, that's fine. But they're not really losing their shorts. They might be, I'm sorry, shorts is not the right word there. They're not really just getting killed. They're coming down 3, 4, 5%, 6%. Honestly, when in my history, 5 or 6% down on earnings is not that horrible. It's a reaction, maybe a little more than we expected. But again, these largest companies have the best opportunity for potential upside earnings. Microsoft, they're not showing that much in their AI right now because they're plowing it into, like you said, the top line type stuff like Amazon used to do. I think a lot of people learned from Amazon back in the day that, hey, I don't necessarily have to dress my earnings every quarter as long as I've got a good plan as to where that money's going. And Amazon is proof that they don't have to play to Wall Street to succeed.
Let's
All
take
right.
it back to the jobs number just for a second, because I did do some analysis in the background here, and I know we look at 12,000 versus 100,000 as a huge miss. Professor, you might know, you have done, or you of Michigan professor Justin Wolfers estimates of 40,000 jobs. The hurricane cost 40,000 jobs, and the Boeing strike costs another 40,000 jobs. So there's your miss, right there. So, and even, the disclaimer from the BLM or BLS, sorry, the Bureau of Labor Statistics was saying the same thing, that they couldn't account for how much hurricane impacts were here, but they likely were impacting it. So, I mean, we're at a point, we look at these numbers and take them at face value and say, oh my gosh, it's a big miss on on-farm payrolls here. And, why is the market trading higher on this? The bears will be arguing this is just, again, another, example of the market not paying attention to the underlying fundamentals here, but the macro picture. But the macro picture was definitely clouded from those hurricanes and from the Boeing strike. So the question I've got coming to you, Tommy, is taking it to the broad market here. I mean, it was an ugly day yesterday, but what are your thoughts here as we enter a seasonally strong period for the market?
I haven't seen anything that's actually breaking down. I mean, again, you still have strength. Tech has come back so much over the last month in relative strength, in patterns, and looking at where they're set up. There's so many tech things that are set up right near or at or above breakouts. IGV, the software, is like one of my favorite charts right now. Has it gone screaming higher off of that base break? But if you could pull that up, Joel, IGV.
Okay.
The
I got
software
it.
ETF, looking at that just as a stance to where, again, look at that monthly chart. I mean, software, we know there's a ton of earnings in software. We know there's a lot there. This is right here to where, and that monthly chart right there is even with is basically with the Microsoft earnings hitting it pretty hard yesterday, but still, that's still a clean breakout. No matter how you slice it, even with that big tail up top. And we kind of know that was one company that's a high weighting here. But like you talked about team, there's a lot of these others that haven't done anything since the big turn down in 2021. And they're starting to leave very, very long bases. Microsoft is kind of an anomaly. Look at some of those that are down, still down 30 and 40%. And they're trying to get out of big, long bases.
All right. We're on the line with Tommy Lackey, CMT, founding partner, CIA at Relativity Capital Advisors. I got a top question coming up for you, Tommy, but real quick, Justin Wolfer's tangent, Dennis here, the U of M professor.
Yeah.
Remember in the early 2000s when Rob and I were designing software for prediction markets
Joel's
for
done
trade
everything.
reports? Remember that?
Yeah, he helped you with it?
Well, we went to me and him went to DC. Rob and I went to DC to a Brookings Institutional Conference on prediction markets,
Yeah.
and Justin Wolfers was there. And he had written a bunch of papers about sports.
Really smart.
Yeah. I tried to get him on the show a couple of times, but I'm going to keep trying again.
Yeah, we'll see if we can get him on. He's
a U of M
really
guy.
smart.
All right, Tommy, get your crystal ball out from underneath your desk, okay? Because when we talked to you much earlier in the year, you said, I don't know about a recession in 2024. I think maybe we'll push it out into 2025. So dust off that crystal ball here. And what are we looking at? Mid 25? Never? What's your prediction on the recession?
Not never, because we aren't that smart. But I just don't see that we have it right here in where we are. We don't have any real signs that we're pushing there. We don't have any real scenarios. And if the Fed, which is going to continue to lower, just not at the pace everybody thought, as they continue to kind of pull numbers back a little bit and lower some, that's going to help a lot of different interest rate sensitive areas of the economy. And that's going to give a boost as well. I mean, really what it comes down to is you have to think that major economic or major earnings are going to turn down for us to get a recession. And I'm asking, where is that going to come from with all the innovation we have right now with AI and the changes that are coming through that? Again, that's not just going to affect tech. Now, I talked a little bit about this when I was here early summer, I think it was, but I talked a little bit about it, but I'd really love to have a longer period to talk about the demographic side of things, which I'm not much of a crystal ball or predictor. I tell all my clients 6 months is about as far as I can ever even possibly see out, or anybody can. The rest is just speculation. But I believe we're now about to go back into a demographic situation that does allow for some longer term views on different things, because if you look back at the baby boomers and when they moved through different age groups, the industries that followed those age groups absolutely outperformed. Demographics work, and we're about to go into a pretty large upswing here that could coincide with some longer term prosperity, no matter what the fools in Washington do.
All right. Well,
That's a
we've
good
been
that's a good finishing for Tommy right there.
that
I
is.
love it.
We've been on the line with Tommy Lackey, again, Relativity Capital. Tommy, we love having you on Pre-Market Prep. Always some great information. Thank you for joining us here on this morning and helping us break down that jobs report.
All right. Thanks, guys, for having me. Y'all have a great week.
Thanks, Tommy.
All right, guys, we've got a few minutes left, about 13 minutes left till 9 a.m. And then we're going to have a special interview at 9 a.m. with one of the leaders of our trading competition. So stick around for that.
Nice.
So let's go break down some more earnings reports, because we did basically all the notable ones from yesterday after the close. Now let's go to some from this morning. You had ExxonMobil and Chevron report. Looks like Joel's got Exxon on the screen, so he made the call. We're going to start there. Exxon reported EPS of $1.92. That beat the $1.88 estimate. Sales came in at $90 billion, flat basically. That missed the $93.9 billion estimate. Raises quarterly dividend by 4% to 99 cents a share from 95 cents a share prior. And you're seeing ExxonMobil up slightly, about $2, 2% this morning. You're also seeing oil just overall this morning up. So kind of a good day, I guess, for Exxon and Chevron to report. Just, I mean, if you had they had to pick on a day to report where oil was up or down, they probably pick up. So you're seeing Exxon up about 2%. Chevron's basically the same.
Unbelievable at these two stocks, how they moved together here. Funny on both their own earnings reports, and they're both up. They were both up exactly the same thing a few minutes ago. They were both up 1.9% exactly. I pair trade these two stocks against each other all the time. ExxonMobil has been basically the leader. I mean, it's one of the only oil stocks that are very close to all-time highs, which is really impressive considering how far some of these other stocks are off from all-time highs. But Chevron and Exxon have always been best of breed. They're the biggest components in your XLE. We know the ETF effects drive the bus. So again, when you're looking at these stocks, it's, they move together, they move with oil. Even individual earnings reports usually don't move the price that much.
Yeah, it seems like they both did big acquisitions, but I think Chevron has been just a little bit harder with perhaps the integration. I'll just go with Chevron first. If I would have been looking at this thing, I had along and I see this 152.5 area. I don't know how many highs you have there. Let's see. You have, I'll call it a half a dozen highs in that area. You got through it going all the way to 153 and change. I'll just respect that on the upside. I'm not buying this up 268. And then the Exxon Mobil, similar. I mean, it's held up better, but I'm surprised it didn't get back up above here 120. So the fact that it didn't get back to those highs, not the high for the week last week, but pretty much. So, man, let's see what happens. 120.50 needs to get up there, or maybe give a little bit back in Exxon Mobil.
All right, let's go over to Wayfair real quick.
Big move.
Ticker W
Big
here.
move.
Oh, well, not anymore.
What happened?
I don't know. EPS came in at 22 cents.
Conference call.
Yeah, EPS came in at 22 cents. That beat the 13-cent estimate. Sales came in at $2.9 billion. That beat the $2.87 billion estimate. Shares shot higher, up to around $50 a share. And then as we've been doing the show, it's back down to basically where we were at before the report at $43 a share. So something must be going on during the earnings call or something, because, this stock went again to $50 a share at the beginning of the show at 8 a.m. And now it is back down to 43. So a lot of volatility here in Wayfair.
There may be no retail stock that is, we talk about the fall in Celsius and we talk about the fall, from Grace and a lot of these companies, the retailers, but Wayfair's fall was just epic. I mean, the rise in 2020 from $21 to $350 in a year is unbelievable. It's like a 2,000% move in 1 year. And then it gave the entire thing back a year and a half later, which is unbelievable as well. So, I mean, it's just, a lesson in like bubbles and chasing, valuation, all of it really all put into one here. The stock has never been able to regain its footing since the collapse of 2022. So I don't know what turns the story around. My wife does some shopping on there. Lisa shop on there, Joel Wayfair?
Yeah, we got a couple things.
They do some shopping on there. What's the valuation? I never look at this thing from a fundamental perspective. We're going just for fun. So
market cap of $5.3 billion. You have a forward PE of around 32, price to sales of 0.428. So doesn't look that expensive.
No, but retailers, when their growth starts to slow, typically slide down. Like if you do the comparables, on retailers, and again, you want to pay 32 times earnings for Amazon, you want to pay 32 times earnings for Wayfair. Take Amazon. A lot of retailers trade in the 20s or even less. So it's still got a little bit of a premium multiple of 31.
Can I take a pass on this one? This is a tough
always.
One. Okay.
Always can take a pass. It's what traders don't do enough is they try to make a trade on something that there's just no trade there. And, I even struggle with that sometimes, like, you make a trade out of this. It's boring right now. I'm having a slow night. Well, let's just make something happen. Whenever you try to make something happen, you usually get yourself into trouble. If the setup's not there. The setup's not there. Sit back and wait for your setup.
All right. Well, we do have some other pre-market movers. We kind of stay away from this stock, and especially right now, it's going to be very volatile, but I think it's worth mentioning. DJT giving up some gains the past couple days. Of course, was one of the hottest stocks on the market, rallied up above $50, now back to $33, down another 6% this morning after closing down 12%. I think a lot of people have been expecting this to be a kind of sell the news event, regardless of the outcome of the election. Yeah. And maybe some people just kind of getting out ahead of that early and taking some profits before. Because again, I think no matter the outcome of the election next week, it's a stock that has no fundamental, no earnings.
No revenue.
Yeah, revenue.
There's no real
which is kind of important.
There's really not much here. And this is just basically been trading off of, the rise in the Trump and the polls. Back when we were starting early September, Harris was leading. And Trump, obviously looks, in some cases they're saying not leading, but it looks like overall that Trump has taken the lead. And that's the big rise, from $10 or $11 up to $50 was all the rise in the polls. So this is just like your predictive markets here. Now maybe selling off a little bit. I don't know. I think it's just, I don't know if this is necessarily a polls thing or not with Trump here. I think it's more just the stock got way ahead of itself. You go over 11 to 50. It's a 400% move in, 30 days. I mean, that is just an enormous move. This is the check back. Again, pay attention to your polls, but I wouldn't be surprised if we get a bounce at a certain point in time here too. Joel, what's the 50% retracement on this thing?
Let me,
we got to be getting damn close to it.
Yeah, here, let me get out my trusty tool. Boom, boom, boom.
Really close right now.
Yeah, right
just
here.
Just cutting through it a little bit.
Yeah,
I think you got a logical bounce area in the 30s here. So not fundamental. I'm not putting this in a long-term portfolio. It's none of that. But if you add it on for a trade, could you get another pre-election pop here? I mean, obviously, polls mean a lot here, but we've just sold off substantially here. I think 30 is a logical bounce area for this.
So you want to hear something? I'm gonna put this. Well, first of all, you got to read this article by Hayden. My nephew Hayden Buckfire. He did an article here he did this about 3-4 days ago about the prediction markets and how the possibilities, how they can be skewed. So I couldn't resist, and so a couple days ago I put a few shekels in the predict.org account, right? Because I thought things were going to be I thought the sentiment was going to change a little bit.
Yeah.
And the number one rule I give you, I didn't file. I sat on the bid. I'm not going to tell you what contract. Waiting to get hit, waiting to get hit, waiting to get hit. I never got hit. I was just looking for a scalp. Okay. I never got it, and the thing moved about 10% on me. And I'm like, instead of lifting the offer, that was the one thing. But then
What are the spreads?
that tight.
They're like 1 cent.
Yeah.
Not
Yeah.
bad. Not
With
bad.
good liquidity. Good liquid. I mean, you can bet on state things, different states. Some stuff are real out of whack. And
Yeah.
so I pulled the account up yesterday, and they took, and I don't know if this is true, and I'll double check it, but they said the market was closed for new money. They weren't accepting new money.
What did you open?
Predict.org. Predict
Predict.org?
for a couple of the contracts. And I'm like, are you kidding me? So this using the presidential race. So that means they have, 57 to 50. They locked it. They just locked in they just locked in all that money. They just locked in all that extra juice. And so and then I got to wait. Now I said, I want my money back. Now it's 5%. I got to wait 30 days, and they're going to dig me 5% on my exit. And I not even.
Do you take your money out? They ding you 5%?
Yeah.
Come
Yeah.
on.
Yeah.
So you put money in there, and they take 5% on the way out?
Yeah.
Not only on the spreads, they're going to take your money.
Well, the spreads aren't that bad. The spreads aren't that bad.
But either way, that's where they should be making the money, is the spreads. Is that true? Chad, is that true that everybody loses 5% on the way out? That's crazy if that's true.
Well, I could be wrong, but I'm pretty sure, and I don't know, I'm pretty sure it runs as like a nonprofit. Like it's predictit.org is the website. And I'm pretty sure it started as a research project from some university in Canada.
Yeah, Victoria University, Dennis, up in Canada.
Oh, they're saying it's true. Man, that sounds awful. You know what? Like, here is the thing. Like, you don't realize 5%, like, taking money on. Then somebody's saying they take 15% of the profits too. And they got spreads in there. I mean, you're getting juiced to death.
I know.
Juiced to death here. So, I mean, hard to make money, like, as a trader, and like everybody thinks, oh, they're going to make 80, 100%. They're going to trade their penny stocks and make 500% on their money and 1,000% on their money. A good year for me is like 30, making twice what the market's doing and working it. Like 20, 30, 40% on your money is pretty darn good. I mean, when you're taking 5% and then you're taking a spread of 1%, and then you're taking some of the profits too. If you're right, you might not come out with making money here. That's tough, man.
I know.
And then you pay income taxes too, Eric says. True enough. Yeah.
What's
the point? Let's quit.
Sorry with my tangent.
No, I wanted to know that because I'll never go there ever if that's the case.
Yeah.
Crazy.
Yep.
Just looking at our pre-market screener, looks like we touched really all the big movers.
Really?
Yeah, I mean, I don't think actually there's one that we might have kind of missed. Abbott's up 5%.
What's going on with Abbott? That's a big move.
Yeah, Oppenheimer 6 their buy rating for Abbott, so I think it's popping on this buy rating from.
No.
No. Sorry. It's
case.
The analyst rating came after this Rickett thing. So Rickett, which is having its best day like maybe ever. They won a lawsuit about the baby formula. So there were some lawsuits that Abbott's baby formula caused like a bowel disease in babies. And then I forgot that I was reading about this last night, and then I saw the Oppenheimer thing last. So Abbott got some good news on this ruling, and then Rickett, which I don't know, is that traded on the American, on the US?
No, London, I believe.
Okay, so either way,
I don't think it trades here, so I don't think we even have a ticker for it. Maybe there's a 5 symbol for it, but it's over.
Got me on that one.
Yeah. So either way, good news for Abbott here, because those baby formula cases, I mean, if they can get out of the weeds on that one, I mean, that's a big overhead on the stock.
It's 3M with the earplugs, Johnson & Johnson, obviously with the talc, and Abbott with the baby formula. So I mean, these are the big things. So this is big news. This is a huge move. Abbott Labs typically doesn't move around more than a buck
It
or
doesn't
two. So
move
you see
this
us-
much. It didn't move this much all last month.
No, I know it doesn't move a lot. I trade this
Yeah.
all the time. People are always like, "Why do you trade stuff like Coca-Cola and Abbott?" You know why? Because I can control the risk and I can size up on it.
Size up.
You know,
Yep.
I can size up on that stuff because it's less risky. You know, you're trading penny stocks, like stuff moving. Like everybody wants to trade GSAT. Everybody wants to trade GSAT. It's not. I guess it's a tight market, buck 46, buck 47. But the things are moving around. Like, you know, where was it today? Buck 70, buck 60, buck 30. You know, all over the place. I mean, you know, things can get away from you in a hurry. The reason I've been in business for 25 years, I've said this before, I'm going to say it again, it's important to say. The reason I've been in the trading business, made all of my wealth from trading. All of my life has been made from trading. You know, the reason that I've been in this business successfully for 25 years is not because I make great market calls. It's because I control risk and I manage risk really well. And I can't manage risk in stuff like this. You know, like wild stocks. You know, Abbott Labs, it has a wild headline, you know, there's risk there. But, you know, like certain stocks like Staples, mega caps, you know, stuff like that, I can control the risk to a certain extent. So that's my bread and butter. You know, being able to like understand those ETF effects and picking up a little bit of money here and a little bit of money there. Not going to make 40% overnight. Sure, it's fun when you do. And sometimes you get a Viking Therapeutics and you do a little bit of speculative stuff. And that's, you know, but that's not my bread and butter. My bread and butter isn't, you know, speculating on pharma.
Triple D, we have someone in the green room along with Zunaid. So
yeah, let's go.
Before that, Joel, who do we have coming on with us on Monday?
You know what? Todd Gordon. I dusted off Todd Gordon, and I want to hear his take going into the election. I want to say hi to Zunaid. Hi, Zunaid. I want to say hi to Sebastian there. Hey,
what
Z,
is
good
going
to see
on?
ya.
I will say the art you talked about predict it. I mean, there's Kalshi as well. Kalshi is one of my favorite ones. And you can ARB too. I know, Dennis, you're a fan of ARBing. You can ARB between the two sites as well on the same outcome or on the different outcomes and make money that way. So
do they charge you the 5% out over there?
Kalshi, I don't think so. I think
okay, that's where
Kalshi's much better, but obviously, you know, if you're Canadian, so I don't know what treatment you get.
It charges me 10 because I'm Canadian. We're used to paying a lot of tax. We can charge those Canadians more.
Dude, it's insane.
I'm going to do an ACAT. But anyways, you guys got a special guest coming on.
Yes.
We're ready to go. And everyone, good luck out there. We'll be back.
Stay here, though. Zunaid's got a good one for you. Get him, Zed.
All right. I appreciate you guys. Joel, Dennis, have a great weekend. Happy trading. All right, chat. We're going to go ahead and talk to my man, Sebastian. You guys know, let me go and put you in the back. There you go. You guys know we've been running this trading competition. I'm going to quickly go ahead and show you guys what that is all about. And then we will talk to Sebastian, who is actually on the leaderboard of these trading competitions as well. Let me go ahead and move this here. And you can see Sebastian, you know, he had a little bit of a dip there. So he's coming up, trying to make things happen. 3rd place. And then, you know, he's trying to trade back in. Sebastian, welcome to the show, my man.
Welcome, Z. How you doing?
Doing well. You know, I want to congratulate you on the success so far. Now, you haven't won. You've got some ways to go as well. But before we start, just quickly tell the folks, you know, how long you've been trading for, because I know you're still in college.
Yeah. So I have been trading for about a little over a year. So I started last year in August. And for about 6 months there wasn't really anything insane. I was just kind of like, I'll do it for fun, maybe start learning some stuff. I kind of found the Benzinga channel and I was like, oh, you know, let me start watching these guys because I was retaining a lot of information from the live streams. Yeah. Just in terms of learning and stocks and all that stuff.
That's awesome because you told me that you do watch live trading and stuff like that. And by the way, live trading is going to start here in about 6 minutes, so I appreciate that. I know Ryan, you know, really like the fact that you watch the show as well. How are you kind of liking the competition so far? What's been like your favorite part?
Man, so I guess the trading platform is probably my favorite. I definitely haven't used a trading platform like this in you know, my whole trading career. Just I don't know, the way it's set up, the way you can easily execute things. Because I mean, in trading, that's one of the biggest things is being able to get in and get out. Especially for like me, I'm more of a scalper than like a long-term trader. Yeah. So that is able to enhance my ability to make as much profit as I can.
And then what are some of your strategies? Obviously, you're in the top 10 on the leaderboard of contest number 2. If you get first place in contest number 2, you get $10,000 deposited into your broker account. What's kind of been your strategy where you've had success so far?
Well, so again, I learned this from the Benzinga channel, I believe. So I really use the VWAP reversal or bounce, whatever you guys want to call it. That's one of the biggest things I use, just because usually stocks I'm looking at, especially SPY, kind of follow that trend more than the other stocks I've looked at. So that's one of the biggest ones. I also kind of just do, again, very, very simple, like bull flag, ABC pattern strategy. Very, very simple. I keep it very like in and out very quick.
Are you grabbing options or cash stocks then?
Options.
You're
Yes.
grabbing options itself. Okay.
Yes.
Now, are you, so, before this trading competition, of course, you had your own trading account as well. Are you kind of mimicking the same trade? So like, hey, if I'm going to buy, say, I don't know, 5 contracts on my real money funded account, I'm going to buy maybe say 15 or 20 on the trading competition account just to kind of have a little bit more leverage itself.
Yes. So I usually do them separate, because I do trade with like my real money on Robinhood, because I don't actually have an account set up with Trade Zero because it's my first time being on it. So I do follow, again, similar strategies. Sometimes I've even had them in at both at the same time, and then they've actually exited at the same time. So occasionally I will follow the same trading pattern, but usually they're separate for now.
Okay, gotcha. Well, let me ask you this before we go. 2 more questions, and then we'll hop to live trading. If you win the $10,000, if you come in first place, what would you do with that money?
First place, $10,000. That's a good question. Obviously, I'd pay some of it in student debt because I am in college and it's kind of expensive. So that would be up there, number one. Other than that, I don't know. I'd probably just invest it. I don't know, maybe take my girlfriend on a good date, something like that.
I'm sure she would really appreciate you doing that for sure, especially stepping it up. If you're in college, you can just step it up with $10,000. There's plenty of nice places that you can go to on date night.
Sir.
All right, last question. What stocks are you kind of looking at? We've got earnings season. It's already kicked off, of course. Tesla's reported, AMD, Microsoft, Amazon, right? Next week, what are you kind of looking at in terms of opportunities in the markets?
So I quickly looked over earnings for next week, and again, I really do follow the Mag 7. Like, that's kind of the big 7 I look at for how the week for me, tech stocks, what I'm going to do. So next week, earnings wise, I won't actually be following any of those earning stocks. I will be looking at SMCI just because I followed that since it was at 1,000 before the split. So that's something to look at. But otherwise, probably just SPY, Nvidia, and Tesla. Tesla is one of the biggest ones that I've been looking into, just because I've heard a lot of people bring in some data and say, oh, 5 years Tesla's going to be the most expensive stock, and I'm like, well, let me inquire a little more and see how it's going to move. I did like their earnings, and I just kind of like the new innovations that Elon Musk has been trying to do. So just those 3 for now this week.
All right. Appreciate your time here, Sebastian. Best of luck. Again, you're in the top 10 of contest number 2 of our trading competition powered by Trade Zero. And hopefully we'll talk again once we certify your victory if you get there.
Thank you so much. Have a wonderful day.
You got it, Sebastian. Take care. And chat real quick, I'm going to go ahead and show you guys again. If you guys want to sign up, the link is in the chat. This is our trading competition powered by Trade Zero. The whole prize pool was more than $30,000. And of course, contest number 1 has completed. Contest number 2 is going on, where first place, you can go ahead and win $10,000. Second and third place, do go ahead and win some money as well. And of course, the third contest is going to kick off on November 15th. We're giving away $15,000 to someone who wins. That's real cash that gets deposited into your Trade Zero account, and you can pull it out and do what you want with it. So if you want to sign up, the link is there. If you have any questions whatsoever, any issues, you can email me at zunaid@benzinga.com. We appreciate you guys for watching. Live trading with Ryan and 13 is up next. And don't forget to sign up for the trading competition. 100% free, by the way. You don't have to do anything. You don't have to pay anything. Nothing like that whatsoever. Check it out. Link is in the chat. We'll